All right, Christian Tharp, welcome back to Pre-Market Prep. How are you doing this morning?
I tell you what, guys, I am doing great. And I always love being on the show because, I live in this technical analysis bubble and I don't know anything about the stuff you guys talk about.
Who's Elon Musk? I just trade Tesla. Look at the chart.
I just squiggly lines, triangles, shapes. Come on, it's like I bring my daughter in here. We just look for squiggly stuff. So when you guys start talking,
what?
I'm like, really?
Christian,
I didn't know that.
Man, if that works, and if it works for you, keep doing it by all means. It's worked for you, obviously, for a long time. And I wish I could just look at the squiggly lines. You obviously look at them in different ways than me. But I mean, the squiggly lines do tell the story. If they don't if Musk doesn't get his approval, if he doesn't get, his pay package approved, the stock tanks. It shows up on the charts. So It's there.
Yeah, I always, there's always a bull and a bear, right? There's somebody that's bearish on, let's say, take Tesla. There's somebody that's bullish. I always say the market kind of tells the truth, right? That's the winner, or that's what the market is thinking. And so even though it kind of can sometimes look cute or look like voodoo or things like that, the reality is if you really dive down and take something like GM from yesterday, we've been following GM for a while, and it just kept hitting 46, just kept hitting 46, just kept hitting 46, right? You can see it right there. Perfect little line, like a little haircut right across 46, right? So on one hand, I could draw a little line and it looks kind of like, all right, the little line on a chart. But the other hand, what's going on underneath that, right? You think supply and demand. You think supply is coming in, if we can soak it up, right? So there is some logic behind it. And we see a move like yesterday, and it's like, well, you could be as bearish as you want. The market just said, right? So there is that rhyme or reason behind it. But we were watching this yesterday. Ford, not looking as good, but kind of getting a good move as well. We're just kind of laughing that everything is all about tech. But you can see 12 on Ford. Look at that 12, and we thought we had a pretty big breakdown. And when it broke back a week or so, we're like, well, actually, this is bullish. Ford should be going higher. Just kind of gave us a little bit of a fake out there. And sure enough, here we are, right? Now, of course, then there's going to be the why. Well, but why, there's like, I don't know. You're going to have to go on Benzinga and talk to those guys.
No, we're the why. You're what's happening, actually.
Yeah, all I can tell you is it doesn't change that it is.
I see what you're looking at on Ford. Is there a catch-up trade here with GM? Like usually Ford does eventually catch up. Is there a catch-up trade for Ford here?
Yeah, we're targeting getting up to that 13. You're going to look back there in February. You look at the beginning of March. You look at the end of March. You look at the end of April. Yeah. This 13 number should act as somewhat of a magnet. Ford's been pretty good, to be honest with you, in this price range and being as liquid as it is. It's been pretty good about the whole dollar amounts anyway. So we're thinking you get through 1250. It challenged it yesterday. Should be on our way to 13. If you can take out 13 again, then I think you could see some real progress. But GM obviously seems to be the one that is favored at this stage.
What about outside the car space, Christian? Any setups that you've found interesting? What stocks have you been trading the past week or so?
Absolutely. One of the things that has us concerned about the overall market right now, we don't want to be, because our view has been kind of like bull and that we would resume. But things like the Dow S&P non-confirmation from like 3 or 4 weeks ago is driving us nuts a little bit. Big momentum divergence on a weekly scale for the Dow. Breadth, kind of looking at, say, for example, S&P stocks above the 50-day just keep dropping and dropping. So I'll be honest, we're a little concerned, and we would love to see a little bit healthier move. That being said, again, we take each stock on its own merit. So starting with Honeywell, HON, sure looks like it wants to at least give it a whirl, getting up through that 210, 211 area up top. If you go back to right about 1.5 years or so, it just keeps going up in that zone and coming back down. So it looks like it might want to take it out. You can see it pretty well there on that left. Well, really, I guess all of them. But we were watching that, which was a little bit of surprise, because if you look at last week, we see this breadth that doesn't look good. We see half of stocks, kind of, again, below their 50-day in the NASDAQ, below that in the S&P, below that in the NYSE. We see what the Dow's doing. Tech would seem to be the place to be, because tech had a pretty big week last week compared to everything else. But we thought Honeywell looked good. And then on the flip side, on the bearish side, we were watching UPS. Came down a week or two ago, tested its 52-week low perfectly.
Wow. what a, you know, and again, I know you don't care about the story, but what a story, you know, from, you know, going from, you know, up, and now we're just, you know, down here at multi-year UPS, FedEx to same story, really. You know, it's, you know, made its highs back 4 years ago, 2020, over $300 down to 250. It's obviously performed a little bit better than UPS, but you know, at a certain point in time, do you always play with momentum, Christian, or do you become a contrarian when you think, you know, it's come down enough? What are you usually just playing momentum?
I would say, you know, definitely momentum. I'm a huge fan of, you know, we kind of start in this kind of area of, yes, trying to identify these breakdown points, pattern. Like take, for example, Meta. Meta was one we've been isolating here because we're trying to decipher what are we traveling in right now, a rising channel, or is that a bearish flag, right? The thing for us, and if you just look the last 2 months on Meta, you can kind of see this perfect channeled outline there. So what I start with is these, you know, I don't necessarily look to trade any one thing. I look for the things that tell me how to trade it, right? So for example, GM was telling me, trade me if I take out 46. Now that could have been GM, that could have been Tesla, that could have been Apple. Just looking for those things that tell me what to do, right? So there's no confusion. And then yes, once we get that move, that confirmation of a breakout, breakdown, whatever it happens to be, then yeah, we try to jump in there and ride the wave. You know, and depending on the time scale, right? So for swing trading, or like take, for example, prime time, we do a little bit shorter term. So we're looking to capitalize on inexpensive or cheap options for a move, right? So, you know, something like GM is pretty inexpensive. You can get a pretty good call option if we think higher, or put if we think we're going to pull back for relatively inexpensive, right? 10, 15, 20 cents. On a short-term scale, we can turn that into something bigger, but we're waiting for those right moments. And it's that technical analysis, keeping in mind that it does start with the market, right? So we do, as I always say, rise and fall with market. But I guess, yes, but we're looking definitely for those breaks, those moves telling us when to jump in and ride that momentum.
And then Christian, I mean, I know you're just looking at things mostly from the technical level, but if you're looking at the overall market, like the S&P 500 right now, ahead of this CPI report tomorrow, is it showing any signs of you know, traders being tentative or scared, or do you think, you know, we're still at a level where we could break out from here?
Sure. Big question. We start to break this down every time lately that we go into like a CPI or PPI or an FOMC, because quite often the market tips its hand, ahead of time. FOMCs are, I swear, like 95% of the time, the market's telling you what it plans to do before it ever does it. CPI, these numbers have done similarly, where a lot of times, I don't know as reliable, but a lot of times, just like the last CPI number, the market made it clear what it was planning on doing the day before. Of course, market reserves the right to change its mind. So we look at what we're seeing right now with the S&P, we're just eyeballing a very short-term mark right around, call it 53.30, 53 and a quarter. You can kind of see, you know, that's what was giving us a little bit of a haircut there a month ago. And that's where we've been holding here as of late. Yesterday, we came down, I think Friday, we came down right around that 53.30 mark, and just keep holding it. So as long as that holds, as it pertains to the S&P, you've got to be thinking higher. S&P, NASDAQ have been moving pretty much tit for tat, so you got to be thinking the same with the NASDAQ. And that's what we're watching. Our concern still is we would love to see a little bit more, I guess, robust in the way of breadth. And it's really unnerving that because the Dow, when these two don't play well with each other, commonly that leads to a problem, right? Now, Dow is more than welcome to catch up, but right now you're talking, it's been 3 going on 4 weeks since the Dow confirmed that high. Somewhat similar to coming out of the bear market when the Dow was the first one off to the races coming out of it, right? And it was sending a signal that the rest of the market was getting ready to follow. It doesn't always work that way, but right now we're saying, gosh, why isn't the Dow, you know, and there's a pretty good trend line if you draw it right across, look at your 2024 January low, go into your April low, end of April low, and then the end of May low, you're going to see that perfect little line running across from the Dow. We're watching that on the Dow. If the Dow takes that out, the Dow's sending a message that it plans on heading lower. And if it is, it ain't going by itself.
Christian, getting into a trade is one thing, but getting out of a trade is another. What do you like to use for targets? I mean, I'm looking at like the GM here. It's in no man's land, right? I mean, you want to take $50? Do you use Fibonacci numbers, average daily ranges? How do you target your targets?
Sure. And as you just perfectly pointed out, there's a million different ways from Sunday to do that, right? For me, I always try to remember and subscribe to that one idea that price is the only thing that pays. It's the only thing that puts money in or out of your account, right? So I always start there. And typically when I'm looking at take, for example, we looked at Ford. Ford taking out that 12, I know that price-wise, I should be able to target 12.50 first and eventually 13. So then it's just a matter of what is my time scale? I would not be necessarily targeting 13 this week, but certainly if I was willing to go out 2 weeks and I, had some faith in the market. So usually I'm looking at price. So when we took out 12, when we broke back above 12 a week and a half ago, our target one was 12.50. Overall, we're thinking 13. So usually I'm trying to focus on price. Sometimes it's just psych levels. Estee Lauder broke below 120 yesterday. There's not a whole lot for me to look at if I look at historical price data. There's not a whole lot going on there.
Wow.
So I say to myself, psychologically, those increments of 5 pop up. Certainly for this stock, you can see 125 just before that. 130 pops up a few times. So I see these prices that kind of stick out. So we targeted 115 for the week. Full disclosure, we bought puts on this thinking, hey, look at that 120 from end of May. Look at that 120 from right back there in November. Market's telling us this matters. We take it out, should be going lower. First price, again, it's more of like a psychological kind of law of large numbers. Overall, we think that tests its 52-week low. So price usually, but yeah, absolutely. You can use ATR, you can use fibs, you can use so many different things, but I try to focus on what I call the big dog in the fight, or the left and the right bar, which is price.
Got it. Well, Christian, I mean, do you have any setup specifically for like this morning or today you're going into, or, just kind of going to be watching the overall market?
Overall market today, we have a couple irons in the fire. I think we're always keeping an eye on NVIDIA. After the split yesterday, we're kind of keeping an eye on if there's a play there, because we think that could get up and get moving. We do like to do a lot, and again, this is more of like in our shorter term prime time scale, which is we do a lot of strangling. We try to pick things that are moving a little bit. And 2 that we were eyeballing was First Solar, and the other one was VST. Those 2 are moving around a little bit. And sometimes with stuff, you can see First Solar just chopping around. If you play your cards right and try to be on both sides of it, we try to kind of catch the move. We're agnostic as to what that move is. So we're keeping an eye on that today specifically. And then VST, again, had been on a heck of a run, but looks like it's running into some problems. And that volatility as of late over the past 1 to 2 weeks has been kind of fun to play with as well.
Christian, we've got this QR code up on the screen for people to sign up to trade with you next week. And we also have a link in the description to that as well. Do you mind talking a little bit about what people will get if they join that room?
Absolutely. Yeah, it's a great little offering from T3 here. They are essentially letting everyone come in. It's a free open house. It is for our prime time trading. Prime time meaning that prime times for me are in that kind of 9:30, 10, Wednesday, Thursday, Friday. And then come in at the end of the day. I love the last 30 minutes of the day, Tuesday, Wednesday, Thursday, Friday. So we come in, we put plays on, we adjust. I kind of refer to it as like a chess match, right? We see what the market does. We make our play. The next day, the market makes its move. We adjust, we roll. So it can be fun. It can have a little bit of adrenaline to it. But yeah, it's an open house for all week. Come in, do a lot of coaching, some trading. You'll probably learn a lot, because if there's one thing my members have told me, it's that I have a very, very unique way of looking at the options trading. So if nothing else, come in, learn a few things, get a few good trades. It'll be great all week long.
All right, completely free. You got no reason not to. Again, that QR code in the bottom of the screen, as well as a link in the description. Christian, always great to catch up with you and have you on Pre-Market Prep. Hope you enjoy the rest of your Tuesday and have a great week.
You too, guys. Look forward to seeing you next time.